And many college students will soon be hit with sticker shock. On July 1st, interest rates on new federal student loans are set to rise, and many new borrowers may be saddled with lots more debt than they expected this coming school year. So how much more will rising rates add to the debt burden? Sharon Epperson explains.
For Samantha Cook, making the decision to go to George Washington University was a big one financially.
I definitely had doubts about it. My parents wanted to assure me that no matter what I picked, we'd find a way to make it work.
Like most families, Samantha and her parents are making it work by combining their household savings, scholarships, grants, and student loans. But loans are about to become more costly for new borrowers. It's not the first time loan rates for students have gone up, and it's likely not going to be the last. Though federal student loan rates are fixed for the life of the loan, they reset every July 1st. And thanks to legislation passed last year, those loan rates are now tied to the Treasury markets, whose rock-bottom rates have gone up. The interest rate on federal Stafford loans will go from its current fixed rate of just under 4% to over 4.5% for loans that are distributed between July 1st of this year and June 30th, 2015. For graduate students, the rate will rise from just over 5% to a little over 6%. Plus, loans for graduates and parents are still the most expensive, with rates rising to over 7%. The increase in monthly federal student loan payments can add up quickly, but shouldn't be too burdensome for most students. For every $10,000 in loans, new borrowers will pay about $4 more a month, based on a 10-year repayment period. Still, experts warn this is only the beginning. Federal student loan rates may continue to increase in the next few years. Even with caps, rates could go as high as 10.5% for some loans. So financial advisors say, instead of dealing with this debt after graduation, find ways to make your education cheaper while you're in school, or even before you start.
We can look for more creative ways to get that degree and to get it for less money. For example, you can go to a community college for 2 years and then go to a great in-state university commuting, get an entire degree for the price of 1 semester at Harvard. Now, that's no slam on Harvard, but it does suggest that while education can be very expensive, it can also be made very inexpensive or affordable.
But attending a less expensive university wasn't an option that appealed to Samantha, who is studying international affairs and political science.
I considered transferring to the University of Pittsburgh at the end of last year because in-state it's about a third of the cost of going to GW. So I decided against it because, you know, the value of a GW degree, my parents and I agreed, for me at least, would be more valuable when looking for jobs later on.
Samantha says she's aware of the debt load she's taking on, but she's put off worrying about it for now. For Nightly Business Report, I'm Sharon Epperson.